Hello everyone, welcome to the market opening bell on Wednesday, April 9th, 2025. The national team has stepped in to support the stock market coupled with a sustained rebound in US stock futures during Asian trading hours, lifting Asia Pacific markets. Hong Kong stocks follow suit with a rebound. The Hang Seng Index opened 329 points higher, peaking at a 625-point gain to reach 20,454. However, the gains later narrowed and the index briefly turned negative in the afternoon, dipping 83 points to a low of 19,745. It closed the day up 299 points or 1.5% at 20,127. The H-share index rose 167 points or 2.3% to 7,430, while the Hang Seng Tech Index climbed 166 points or 3.8% to 4,568. Total market turnover for the day breached 433.1 billion Hong Kong dollars. Before Tuesday's market open, Central Huijin reiterated its commitment to stabilizing the market, stating it fully recognizes the current allocation value of A shares and will continue to act as a stabilizer for the capital markets, decisively intervening when necessary to curb abnormal fluctuations. Additionally, nearly 30 state-owned enterprises announced repurchase or shareholding increase plans, with amounts reaching up to 200 million yuan or more. Mainland Chinese markets opened lower but rallied later. The Shanghai Composite Index hit the low of 3,085 before closing at 3,145, up 49 points or 1.6%. The Sunshine Component Index dropped to a low of 9,296 but ended at 9,424, up 60 points or 0.6%. Combined turnover for the Shanghai and Sunshine markets total 1.6255 trillion yuan. The People's Bank of China announced yesterday that it firmly supports Huijin's intensified ETF purchases and will provide sufficient re-lending support if needed, resolutely safeguarding the stable operation of the capital markets. The National Financial Regulatory Administration also issued a notice adjusting the regulatory ratio for insurance funds equity investments, raising the upper limit for equity asset allocation, expanding investment scope, increasing concentration limits for venture capital fund investments, guiding insurance funds to boost equity investments in strategic emerging industries, and relaxing regulatory requirements for tax-deferred pension ratios. Investment banks estimate that net inflows into Chinese stocks from mainland insurance companies, mutual funds, and social security funds could reach 1 trillion, 590 billion, and 120 billion yuan respectively. The renminbi midpoint rate has fallen for 4 consecutive days to 7.2038 against the US dollar, down 58 pips from the previous trading day, the lowest since September 11, 2023. In spot trading, the offshore renminbi briefly breached 7.35 in early trading, while the onshore rate fluctuated around 7.3. From a technical analysis perspective, the Hang Seng Index faced resistance near 20,500, closing at 20,127 below its opening level of 20,158, forming a bearish doji candlestick. For current month's Hang Seng Index futures contract closed at 19,918, a 210-point discount to the spot index, reflecting investor caution. If the rebound continues, resistance levels are expected at 20,500 and 21,170. US markets endured another roller coaster day. On Tuesday, before the US market opened, Trump stated that he had a productive call with South Korea's acting president and that China was also very eager to reach a deal. Investors hopeful that the US would secure trade agreements and gradually reduce tariffs drove a sharp early rally in US stocks. However, with the US set to impose a 104% tariff on Chinese products starting Wednesday, the Tuesday rebound proved short-lived. and the three major indexes ultimately closed lower. The Dow Jones Industrial Average surged as much as 1,461 points at one point, climbing above 39,000, but ended the day down 320 points or 0.8%, closing at 37,645. The S&P 500 erased its intraday gain of 4%, falling 79 points or 1.6% to close at 4,982, its first close below 5,000 since April of the previous year, bringing it within a hair's breadth of bear market territory. The Nasdaq, which had risen as much as 713 points or 4.6% early in the session, closed down 335 points or 2.2% at 15,267. The Nasdaq Golden Dragon Index, which tracks Chinese stocks, fell 330 points or 5.05% by the close, ending at 6,198. Apple saw its stock drop 5% due to significantly rising costs stemmed from the new US tariffs on China, marking its fourth consecutive day of declines. Large cap tech stocks, which had initially risen, reversed course to close lower. Tesla fell 4.9%, Amazon dropped 2.6%, while Alphabet, Nvidia, Meta, and Microsoft each declined by approximately 1%. On economic data, the National Federation of Independent Business, NFIB, reported that the U.S. Small Business Optimism Index fell 3.3 points in March 2025 to 97.4, the lowest level since October 2024, and well below the market's expectation of 101.3. This marked the largest drop since June 2022.